Hey guys, this is Sumner from landinvestor.co. What we're going to do in this video is break down our $1 million land investing blueprint. We're going to show you guys exactly what it takes to run a seven-figure land investing business. We got a spreadsheet that breaks down all of our numbers. These are real numbers from our business, breaking down cost per deal, average amount of mail per deal, profit per deal, both for cash sales, owner finance sales, operational costs for running a seven-figure land investing business. In this example, we go through what it takes to generate $1.3 million in profit per year and the actual costs and the marketing that goes into creating a business that spits out that cash consistently and reliably. So let's hop on the computer. We're going to dive into this video. Hope you guys enjoy. All right, guys, welcome to the $1 million land flipping blueprint. This is honestly a training that I'm very, very excited for. And the reason I'm doing this is because this is exactly what I would have wanted, what I did want when I was first starting out. And this is really me like pulling back the kimono, pulling back the curtain. We're taking real data from our business from 2022 and giving you guys a full breakdown on what you can expect. And this sets expectations for ultimately what's possible, but also kind of gives the framework that we teach within our Land Investing Accelerator program. And so what we're going to do here is show you guys exactly what it entails to actually scale and build a seven-figure land investing business. Now, one thing that's really important to note about the numbers that we're sharing here is we're not talking about acquisition cost. I think there's so much focus on acquisition cost, but after going through the Land Investing Accelerator program, or really as you start scaling up this business, you'll realize that that's not where your capital should be going. Your capital should be going towards operating the business. And there are so many different funding solutions out there, whether it's deal funders or private money or taking on debt. Like, there are so many different ways to generate capital to fund your deals that acquisition cost is not something that we even look at. Really what we look at is marketing spend. We want to talk about ROAS, right? Return on ad spend. So if we put $100,000 into marketing, what are we getting on the back end? That's the metric that really matters, right? Because there are so many ways to get your deals funded. And in fact, every single person that I know that's at the same level or beyond in the land investing business, they don't fund their own deals. It's very, very rare, unless they've been at it for decades, that someone would be funding their own deals. And so even if you're first starting out, we have a ton of content talking about this, both on our YouTube channel, within the program, about how to get your deals funded, what that looks like. And in fact, in the Land Investing Accelerator program, we actually have a deal funding partner who funds the deals for students to go through this program. I'm sorry, this is not a sales pitch for the program, but just want to give some context here. So really what we're talking about are operational costs. What does it cost to run a business that spits out seven figures a year plus in the land investing space? And so what we're going to do is go through those numbers. We're also going to go through and set expectations in terms of what you can expect from, hey, how much mail do I have to send to have a seven-figure business? What's my cost per deal? On and on and on. We're going to touch on that. We're also going to break down the difference between how much we're taking in from cash deals, how much we're taking in from owner finance deals, what that monthly recurring revenue is from those owner finance deals that you'll generate kind of based on these numbers here. So it was a really exciting training. I did not hold anything back here. These are literally, we're taking data points from our business and carrying them over in here from this year. So hope you guys enjoy this video. Without further ado, let's dive into it. Actually, one last piece of context here too, because I know someone in the comments is going to say, oh my God, mail per deal is 859 letters to get a deal. That seems insanely low based on what other people are saying, based on what we've said in previous videos. The truth of the matter is we have, I don't even want to call it a proprietary system, but we have a pretty interesting approach to how we do our mailing. And so what we do is we stack our mailing with a cold text campaign that goes and pairs with it. We've broken that cost down in here, but what we've seen is that's massively increased our yield from mailers. And so we're actually able to get away with a lot less mail and still generate a really healthy amount of deals by layering those two marketing strategies. You see so many people in this business, they just use one marketing channel. Hey, I'm going to cold call, or hey, I'm going to mail. The truth is, if you look at any other business, there's something what's known as omnipresence. That means showing up on multiple marketing channels builds trust, it builds authority, and it's a way to kind of cut through the noise and cut through the competition. And that's something that we do in our business. We don't just touch people from one marketing channel. We stack those channels on top of each other. We've experimented with so many different marketing channels, but what we found to be best for us is stacking a mail with a text. So when the mail goes out, boom, they get a follow-up text once that mail is seasoned, once that mail has landed. And that's why we're able to actually really drop our average mail per deal down. And what that does ultimately is that's going to drop our cost per deal down drastically, because what we were seeing prior to this was more than double the amount of mail that we were having to send to get similar results. So that's just something that's really important to kind of touch on here. All right, so let's talk about this. So for us, if we look at the year, average monthly mailing has been 10,414 units. It has not been evenly distributed. When we started off the year, we actually were much lower on mailing, and we've ramped that up. One of the things that we did in our business this year is we really pivoted from an owner finance model to a cash heavy model. You see, last year we sold a little over 220 properties, and the vast majority of them were owner finance properties. The vast majority of those properties were what we call entry-level beginner properties. Now, we do still sell these properties on our website because we get thousands of people that visit our website a month, and there's some level of demand for those entry-level properties. But instead of that being our only offering, now we've stacked what we call equity deals, where we're going after buying deals at a true discount. And typically, since we're listing them at such a remarkable discount, we're able to sell them for cash opposed to owner financing terms. And so that business model with entry-level properties, it just requires a lot less mail to generate deals. And so as we came into this year, we added this new strategy, and the strategy has worked beautifully. Caveat is it takes more mail to do. So as we go towards the rest of the year and as we go towards 2023, that monthly mailing number is going to jump a good bit. And that hasn't been evenly distributed throughout the year. But if we go and take our averages, this is what it puts us at. So for us right now, we're at 51 cents, almost 52 cents, like 51.9 for a 2-page offer letter. That's what we use primarily. We do experiment here and there with other setups for marketing. All the cost is pretty much the same. What you're going to find out there is, on average, you're going to be spending about 50 cents is going to be pretty much industry standard, unless you're printing in-house. So if you're printing in-house, you've got your own massive mail house set up in your garage or wherever it may be, you can get that number down a good bit. But if you're using a third-party mail house, 50 cents is going to be pretty standard. We're at 51.9, and we use Rocket Print and Mail, and we've actually got some discounts for Rocket Print and Mail if you guys are interested in using their service. They've been phenomenal for us. So right now what we're looking at is mail per deal is 859 letters to generate one deal that we actually close on. Of course, we generate a lot more leads, we generate a lot more interest, but that's what we're looking at. Again, there is some kind of meddling with these numbers because we do have kind of a backlog of previous mailers that do generate a few deals. So what I mean by that is, in 2021, some of those mailers that touched down that year will bring in deals for us this year. It's actually a much smaller number than you might think. It's probably less than 5 deals this year. So that number is off by a hair, but it's as close as we could get it. Now, our mail plus data cost per deal is $558. So we spend about, call it 10 cents is what we rounded up to for our data. We've used a whole bunch of different data providers out there. There's actually a lot cheaper options than what we use. But what we found is DataTree has been the creme de la creme for us, both in terms of quality of data, but also just in terms of their platform, the filters that you can use on and on and on again. Again, if you guys are looking to utilize any of the tools that we discussed here, we've actually got resources down below that you guys can go check out to piggyback off the tools that we're using. So $558 per deal that we close in terms of mail and data cost. Our monthly data cost right now, backing into that 10,414 records, is $1,041.40 is what we're spending currently. Now, we actually have a call center in our business, so no one on our team takes that initial call. It goes through a call center. They take that intro call, they add it into essentially like a Trello board or a Google form, depending on what you're using. Then our team adds that into our CRM, comps the property, and then goes and calls and follows up with them. So I just took our last quarter's numbers for our call center, got the average on that, which is $825.22. What we see that float around is anywhere from $700 on the low end. I think our highest month has been a touch over $1,000 and the rest of the months are like 850, 8.5, somewhere in there. So 825.22 is what we're spending on average currently based on our last quarter's numbers. And actually previously throughout the year, it was a lot less than that. But as we've ramped up our marketing volume, we've seen that number grow. So we have a really interesting strategy in terms of how we actually place acquisition team members. We call them acquisition managers. They really handle the deals from cradle to grave. And what I mean by that is deal comes in, they comp the property, they follow up, they negotiate, they send the contracts, and they send it off to the title company. I mean, they really own the acquisitions kind of like vertical, like that whole entire unit of the business is theirs. And so right now we use our entire team as overseas, and that blows some people's minds. Like, how is that even possible? We've had both US employees and overseas employees in our business. What we found is time and time again, utilizing overseas employees just has made a whole heck of a lot more sense for us. And there's a whole multitude of reasons as to why that's true. We have a separate video going over that if you guys are curious. So right now, the way that we have our pay structure is they're at $19.20 a month in a base salary. They're out of the Philippines. And then with commission, their monthly is $2,925.50. So just under $3,000 a month is what we pay them. We do their commissions on a quarterly basis, and they get a percentage of the profit from our cash sales. And what we see is kind of like an industry standard from other folks in this business is really anywhere between 1% to 3% of the net from a cash deal. So what I mean by that is, let's say you bring a deal in, you buy it for 20, you sell it for 50. After title fees, all that good stuff, let's say your true net on it is 27 or 28 grand. That's what they're going to be comped on, is that actual kind of gross margin from the deal. And so they're getting a percentage of that. Again, usually 1% to 3% is going to be pretty much industry standard. And I think a lot of people have hesitation. How could you be using someone overseas to be talking to US based sellers? That seems crazy. That seems like that wouldn't work. What we found is, especially in the Philippines, there's a huge presence with the BPO industry. So a lot of these people have been doing telesales or working in call centers for decades. A lot of them have great customer service. Some of them have sales chops as well. In a lot of cases, their accent's very, very mild. And I think kind of a way to reframe that limiting belief is you have to understand that there is tons of people within the United States that also have accents that are US citizens. And so just because they have an accent, it's not someone's first gut reaction to say, what the heck, are they in the Philippines? In a lot of cases, their English is fantastic. Their accent is not a big deal. What we found is kind of the only issue there is, especially in the Philippines, some of the verbiage that they use is a little bit odd. So you usually have to kind of create like a rule book essentially of like, hey, these are the words you should use. These are the words you shouldn't use. What I mean by that is they might describe a property as a parcel plat or like a land acre. And those are the things where you could trip up sellers. And so we just want to make sure that they're using the right vernacular. But other than that, they do a phenomenal job. And what I always tell people is this acquisitions role, or really any role in this business, dispositions, it's not really a sales role, right? We're really here to follow up, provide customer service, answer questions. It's really, really simple. And so you don't need, a sales killer or a closer to come in. Maybe you could eke out some benefit from that, but for the most part, these conversations are pretty darn simple. And usually the people that reach out to us, they have some level of interest. It's not like we're cold calling them, right? So they've received marketing from us. They're calling inbound. We know they're somewhat interested, and at that point, they usually just have some questions about the process, if we can raise their price, who we're going to use as a title company, on and on and on. And so really the hardest skill to train for that acquisitions role is not the phone aspect of it. It's actually the due diligence and the comping. And so teaching them how to do due diligence on a property, check legal access, check for utilities, check for flood zones, check for topography, and then actually go through and comp the property. But what I always tell people is like, the reason this business is so beautiful and the reason it works really well to delegate overseas is because the actual moving parts of this business, the parts that you're gonna pass off to an employee, they're very, very repeatable. And the tasks they're just the same time and time and time again. How we comp a property really doesn't ever change. There's some nuance there, but that really comes from time, and they'll pick up on that nuance. And so really every aspect of this business is trainable. And when I first started, I actually didn't think that. I thought I had some special kind of zest or sauce that I was bringing into the business, and that's why my results were what they were. It's not true. everything in this business is trainable. So that's just an interesting point to kind of tack on there. Now, monthly software costs, we're at $500 a month for our software stack. That's actually a little bit high. We're probably a little bit less, and honestly, you could skinny that down a little bit as well. But that covers just some really basic stuff like a follow-up boss, a phone system, just some random odds and ends for some additional tools that we use, Zapier, things like that. So we rounded up and said $500 a month for our software stack. And then our text follow-up system. So we use Launch Control in our business. That we found that to be far and away the best tool out there. So with skip tracing, and we were going to recycle the same list that we use for the mailing, and the actual cost of the software, we're at about $1,500 a month, plus or minus a little bit there. And then cash deals done. So this should not be a dollar sign here. So we're using this math here. It brings us to 62 point. Well, we'll just okay. It says 62.6 deals. Call it 63 deals. For this year, our average profit per cash deal is $12,849.94. That's actually a number that we're actively looking to bring up. What we've seen is that every quarter that number's kind of steadily climbing. We also had some marketing in the beginning of the year that was kind of going after some lower end properties because that's what we were familiar with. That was kind of our bread and butter previously. And so we've deviated from that. So we were looking to bring that number ideally closer to like $15,000 to $20,000 is where we would like to be by the end of the year. But right now we're at almost $13,000 cash deal annual profit. So you're looking at $804,406.24 is what we're looking at in terms of actual, that's like a gross margin, right? So we sell it or buy it for 20, we sell it for 40, that kind of math, right? That's what we're left over. That's not deducting operational expenses. We'll touch on that here in a second. Now, we still do owner finance deals. Like I said before, we have tons of traffic on our website. We have tons of inbound interest for these beginner properties. And so it's not something that we've turned away from. And honestly, it's actually a really gratifying part of the business for us. A lot of these folks are first-time land buyers. In a lot of cases, they're first-time real estate buyers. And so to be able to get a property for a low down payment, low monthly payment, and ultimately just a low price in general is really exciting for these people. And some of them are going to be, first generation US citizens, second generation US citizens. Like there's just a real pride of ownership there. And not to be cliche or corny, but it's actually something that I really enjoy. So it's not the biggest profit center for us currently, but it's something that we're still going to continue to run moving forward, something that we've ran for a long time, and that's not looking to change here. Now, some of our higher end kind of cash sale type properties do end up selling on terms. It does happen. Sometimes we get stuck with a property that just is taking a little bit longer than we wanted to get it sold. So we'll add owner financing terms. That's usually going to help turn it over a lot faster. Or sometimes we just get such favorable owner financing offers that it's just a no-brainer. And usually those offers look like, hey, we bought the property for 25 grand. Someone's offering a $30,000 down payment. We're getting our basis plus some, and then finance for 5 years, 7 years, 10 years, whatever it may be. So those are the kinds of deals where it's really hard to turn away from. And so we will certainly still take owner finance deals for some of our bigger properties that we would assume are going to be a cash sale. We won't push that off the table, but we certainly incentivize folks to go the cash route just because the terms are so much more favorable if you're going cash in terms of the discount you get. Typically for the owner finance stuff, we're going to be selling at a retail price, or in some markets maybe a hair above a retail price, just because we might be one of the only people out there offering owner financing for that type of property. So for us, we're still not totally getting rid of that from our business, but it's really not what we focus a lot of our attention on in terms of our higher quality buying equity type properties. Now, the owner finance MRR added. Now, a lot of people talk about passive income and owner financing is passive income. It's certainly not. We look at it as monthly recurring revenue, much like a software business would, right? Like if a software business sells a widget and there's recurring revenue to it, they still have to service that customer. It's not done. Just because someone's paying you on a monthly basis doesn't mean the song and dance of servicing that customer is over. It's certainly not. The folks that talk about passive income in this business, they're full of malarkey. It's not passive. There's still a lot of hand holding that you have to do, a lot of questions that you have to answer. There's still follow up with them to get them to pay on time. There's work involved to get that done. But from those deals done, the 68 deals, we've added $16,455.18 in monthly recurring revenue. So every single month, plus or minus a little bit, because sometimes you have late payers, you can expect to have, about 16 grand hit your bank account every month, which is really, really nice. We don't look at that again as like a massive profit center, but it's a nice way to kind of pad our cash flow to ensure that we can cover our expenses for the month. And so it's just a really, really nice way to kind of even out some of the lumpy distribution that you can find in this business. And what I mean by that is you can have one month where you sell 3 properties for cash sales, and then you have some months where you sell 15 properties for a cash sale. And so you can get these big spikes and these big troughs in terms of what you're actually taking down for the actual cash in your bank account. And so one of the things about this business is cash flow management, like in most businesses, but it's very, very, very important. And so having that owner finance income definitely makes things a little bit easier. Average owner finance deal profit, $8,423.68. The reason that number is so low, again, is because we do have a plethora of those kind of more basic entry-level properties that we might be selling for $3,000, $4,000, $5,000. And so the actual gross profit on it, the dollar amount is typically low, but on the flip side, usually their ROI is really, really high. Those same properties we might buy for $300, $500, $600 and turn around and sell them for a 7x, 8x, 10x in some cases. So the owner finance kind of total value, we have it pegged as annual profit, but really it's a total value that you're creating is $572,810.24. That's less the expense of property acquisition, right? So that's like the total value in terms of gross margin, gross profit, whatever you want to call it there. So total annual operating expenses in terms of marketing, in terms of acquisitions team, like to run this business, you're looking at $146,000, $363.76 to bring a total value of $1.377 million. So, almost $1.4 million, just a hair underneath $1.4 million. Now, that's amazing. I think that's an incredible, like those numbers are incredible. There's some kind of expectations here, right? Like some of the things that we're factoring in here is that you as the owner, as the operator are working heavily in the business. Of course, as you have more team members and you delegate more, you'll be kind of pushed out of the business a little bit more, which is beautiful, but you're also going to have more expenses. But with this setup right here, you can run a 7-figure land investing business and you can run it really, really lean. And I think that's what this video is here to highlight. Sure, you can have a business that gives you more time freedom and you spend a little bit more for team and for automation and for delegation. But I think these are really attainable numbers for anyone that's getting in this business, right? Like I'm coming up on almost 4 years in this business, 3.5, 4 years at this point. And so to see these results is phenomenal. But now that we have the blueprint, I'm like, I can plug someone into this blueprint and they could do that in 12 months, 24 months, whatever the case may be. And we have folks that have gone through the program that aren't even at their full 1-year anniversary, doing 70K a month, 50K a month, 40K, 20K a month. Like the blueprint, the model works. And so now that this exists, it's just about kind of plugging it in and doing it for yourself. So hope you guys enjoyed this video. If you guys have any questions, I'm sure someone will have some questions about this. I answer every single comment, so would be happy to answer any of those comments. If you guys are curious about building your own $1 million land flipping business, if you're curious about land flipping in general or what that entails, head on over to landinvestor.co. You can go check out our Land Investing Accelerator program. This is the program that's built for folks that are not only looking to understand the actual mechanics of land investing, but they're also looking to build a land investing business. And there's actually a huge difference between the two. A lot of the educational material out there just looks at, hey, this is how you go acquire off-market land. This is how you list it. And then we're going to send you off to the races. That's great, but no one teaches you how to actually build a business, which is really what we're here for, right? I want something that's repeatable, that's scalable, that has a team, that has processes, like something that is a machine that works without my day-to-day involvement, ideally. And so that's what this program's built for. Really, this is an A to Z program for folks that are just getting started, right? Like if you're at level 10 and you want to go to level 15, probably not the program for you. Although we are actively working on something to help support folks that are at a higher level. But this is for folks that are at level 0, level 1, level 2, level 3. Like maybe you've done 15 deals or less, or maybe you've done no deals. This is a really good place to start. Now, even if you don't go through the program, it's my hope, it's my intention that the content that we're putting out is enough to get the ball rolling for you. Look, guys, anyone can do this. I'm not a rocket scientist. I'm a normal guy. And so it's proof that anyone can do it. So I hope you guys enjoyed this video. I'll see you guys in the next one. Take care.